Now let's welcome in our next set of guests talking about the trends in the SME space, the recovery and whether there's better credit offtake as well coming up ahead. Mr. Chakravarti of Shriram City Union Finance and Kamlesh Gandhi of Mass Financial Services both joining us this morning. Gentlemen, thanks for being with us. Let's dive straight into this conversation. Mr. Chakravarti, now you have a high presence when it comes to the SME segment and loans witnessed a sequential growth of about 186%. What's leading to the improved disbursements, and do you see this trend sustainable?
Morning all. See that 186% is a misleading number. It's basically on a quarter-on-quarter if you look at it, because it's coming off from a small base in the previous quarter. But I think we should be able to sustain 18-20% incremental disbursements in this quarter also, because we are seeing a lot of demand from small businessmen, traders for increased working capital, particularly semi-urban and rural centers. We are seeing a lot of demand. We are also comfortable meeting this demand because the collections also have almost reached the pre-COVID levels. So that's a barometer for me to lend in a normal way.
Okay. Mr. Gandhi, the SME and micro loans are also a large part of the AUM mix for you. How has consumer behavior been in both these segments?
Is this for me? Hello?
Yes. Kamlesh, go ahead.
Hello?
Yes. Okay, I'm going to fix that audio problem with Kamlesh. Kamlesh, can you hear us?
Hi, yes. Can you come again on the question? Yes, please.
Yes, I was asking you on the SME and micro loans as well, and what kind of trends you've been witnessing on both of those segments.
See, as you see on quarter, in first quarter where we hardly had any activities, the disbursement was practically very less. And then in second quarter, we had disbursements of around 800 crores, which improved 2,000 crores in Q3. So quarter on quarter, we are seeing a positive trend. And with the improved collection, our confidence has also increased to lend to this segment. But it will take time where we come back to the original levels of disbursement, maybe another quarter or two. As a lender, we would like to wait and see that how exactly the business activities at the ground level picks up, and what is the real requirement for the funds, and how they're going to utilize it, and what are the changes post the COVID in their working capital cycles. So on quarter, we have seen an improvement, but it will take some time by the time we come back to the normal pre-COVID levels.
Okay, fair enough. Mr. Chakravarti, coming back to you for a moment, do you think that the worst of it or the major stress for SME customers is now over? Do you see improved cash flows going ahead?
Yes, in most of the sectors, yes. But I think see, the travel, tourism, hospitality, education sectors are still under a lot of stress. I think for them, the pain is going to be there for some more time. Other than that, I think most of the rest of the sectors, I think, out of the woods. But again, we'll have to see, because with the rising commodity prices and also rising steel prices, we have to see how the automobile sector is going to handle the rise in input costs. That's also an important factor for us, because we do fund we are one of the largest financiers of two-wheelers. So if how will the manufacturers absorb the cost or pass it on to the customer, and then the reaction of the customer? So probably a couple of more quarters. Wait and see.
Sure. Mr. Gandhi, you've been cautious on disbursements so far, as we understand. What is your outlook ahead for the next 1 year? Do you think credit recovery is one of the themes which is playing out in the current market scenario?
See, coming 1 year, as I told you, it will all depend upon how the things unfolds within the next 2 quarters, and hopefully the things are looking positive right now. But once the activity picks up and comes back to the normal levels, because if we serve to more than 300 different categories of businesses, and if I sum up and aggregate, they are at around anywhere between 65 to 85% of their normal activities. So once they come back to the normal activity, we will get an opportunity to increase our lending to them. And the way things looks right now, we say that we can see a good credit offtake from all the borrowers whom we have been serving, starting from the next 2 quarters, maybe something in Q4, and then Q1 and Q2 going onwards the next year.
Mr. Chakravarti, if I could get back to you, disbursements have been very strong recently industry-wide. And you yourself are targeting an AUM growth of 15 to 17%, as we understand. That is for FY22, of course. What gives you this kind of confidence to achieve double-digit growth?
Particularly on the SME side, as I said, we've been not growing for the last couple of almost close to 2 years, because we've been very conservatively looking at the disbursal. But I think, post-COVID, for the last 5-6 months, there has been a large pipeline was built. A pipeline to approval is at around probably about 24-26%. There's a lot of pipeline, a lot of demand from particularly trading community, which gives me a comfort to lend. Our exposure to manufacturing is not much. Most of it is to trading and service industry, and both of them have come back pretty strongly. Cash flows and they are seeing robust cash flows in the business. So that's where we get the confidence that the segment that we choose to lend, I think, has been actually doing comparatively well in the last 2 quarters. That gives us confidence that going forward we can grow in this disbursements in these segments.
What end of the loan spectrum is picking up? And when I say I'm trying to not quantify it by MSC or SME, I'm trying to understand, are these term loans or are they working capital loans? What kind of loans do you think there is an inquiry pickup which is happening?
Mostly working up. The traders, basically the segments that we fund to, what they require is mostly would be working capital loans. As I said, we don't have much of an exposure to manufacturing, so term loans term and working capital both would be needed by a manufacturing sector, but on the trading and services side, it's mostly working capital.
Gandhi, when you look at the entire MSC sector, the large part of the NPA problems did not happen because of government guarantee schemes, the credit guarantee schemes. The cover of that gets over. Do you fear that now the real NPA problems could start coming up? It's like saying that somebody has kicked the can down the road because of government guarantees.
No, not really. I don't think any government guarantees have anything to do with it. For example, if you look at SCARF, we have a 30,000, close to 29,000 crore book. The government guarantee scheme, we have only disbursed about 65 crores, and that's for their incremental working capital needs or meeting their shortage of working capital, and not for, definitely not for evergreening the book. So I don't think the government guarantees played a role in NPA management in the industry. It's It's mostly, improvement of cash flows, and I think that's what has helped. If that is the case, even the restructured assets should have been a very large part of the portfolio by now. But that's also not true because
Would you like to respond to my question? Pardon me, we are all working from home today, so there are connections, so sometimes confusion happens. Mr. Gandhi, did you hear my question, or would you like to ask, would you want me to ask it again?
Regarding the NP and the government guarantee schemes correlation, is it on that?
That's right.
So, as Mr. Chakravarti rightly pointed out, that the current NP has nothing to do with the government guarantee offered for funding under ECLGS schemes, because it forms a very minuscule portion of the total AUM what we have right now. So the function of the current NPA is, I will attribute to two things, is the credit underwriting practices pre-COVID. And number second is the improvement of the cash flows from time to time. If you see that from around 40-50% of collections to right now at almost pre-COVID level of collections, justifies that the underwriting practices are good and the cash flows have also improved. So if you say in our case, the loans extended under government guarantee has been almost very, very negligible. So this is the function, as I told you earlier, of the improved cash flows and underwriting practices.
All right, gentlemen, we'll leave it there. Thanks so much for joining us today.